As the intense struggle of transnational finance continued in America, culminating in its triumphant establishment of the Federal Reserve in 1913, a young nation had only just come into being in the Southern Hemisphere, Australia. It's no coincidence that a man destined to play a major role in the formation of the Commonwealth Bank in the fledgling Australia was an American who had experienced the banking system in the USA before moving to this young country. His name was King O'Malley.
King O'Malley was obviously one of the most colourful people we've ever had in Australia. He had arrived from America with a colourful history behind him, and he certainly increased that as soon as he got here. He arrived, I think, in 1888, which was not terribly long after we'd had a major financial crisis. A number of banks had smashed, industry was in very big trouble, and we'd never had anything like it. It was also a period which, not terribly long before, we'd even had rum as the money system. It was during that period. We didn't have an official national money system as we have now. Different companies in Australia issued their own money. The Bank of New South Wales printed its own notes. And all this led to a lot of confusion about how the money system was going to operate. And almost as soon as he got here, King O'Malley, who had been a banker in America, had the theme that we've got to make sure that we avoid the sort of enormous financial pressures that come from a monopolistic money system. And he was tramping round. In the election, he finally got elected as a Member of Parliament in South Australia, I think 1895. And he was dealing with the matter of interest. Farmers are paying 15% on their loans. It's outrageous. No farmer should ever pay more than 5% on a loan, or 7% on an overdraft was what he was advocating. What he'd say today, where they're paying 27% in some cases, is another matter. I think he had one term in the South Australian Parliament, and then from there he moved to Tasmania, was a very colourful figure there, and finally stood for the first ever federal government. And in 1901 was elected, and no sooner had he got into the Parliament than he was on his favourite theme. Australia must be a nation that never allows itself to get monopolised by an international money system or indebted to the point where the people were hurt. And so he had two ideas. The government should print the money, not allow different private groups to print their own version. And secondly, we should have a people's bank that ensured the nation never became debt-ridden. And it was under his relentless drive that finally the Commonwealth Bank was established in 1912. Now, obviously what he was saying countered what a lot of private interests thought, and so he was attacked in the papers, he was smeared, he was quite often painted as an irresponsible character, and there's no doubt he did some eccentric things, but he was very consistent in the line that he took, that debt was one of the greatest dangers every nation faced, and therefore, more than anybody else, I believe he was responsible for at least starting Australia out with this idea that a people's bank issuing its own money at incredibly low rates of interest was a safe alternative to the idea of borrowing internationally.
In 1910, the Fisher Labor government won a strong working majority, and within 2 months had taken control of Australia's note issue. Up until this time, only the private banks had been issuing notes. Now, O'Malley continued with his campaign for a people's bank against increasing pressure from alarmed private banks who had up until this time had a monopoly on credit creation. They were determined to thwart Labor's policy of a people's bank able to compete with a private banking cartel. Federal member William Higgs told Parliament of his concerns over the bank's tactics.
It's a common experience for any man who dares to advocate Labor policy to quickly get a notice from his bank. He must discontinue his course or clear off his overdraft.
So this incredible struggle over whether we should have a Commonwealth Bank took place over a 10 or 11-year period. It didn't just happen straight away. There was an enormous number of speeches. O'Malley was joined by other members of Parliament who began to see the virtue in what he was talking about. Fisher was obviously one, the Prime Minister. And finally, after this great argument had gone back and forth throughout Australia, in December 1911, the Act was finally passed to establish the Commonwealth Bank. And then the machinery was set up. They had to get somebody to handle it. The original Act stipulated that the management would be in the hands of a single governor. They had to find somebody who could do it. And so a young chap called Miller was invited to move from the Bank of New South Wales and to take up the first post as director of the Commonwealth Bank, which finally opened for business in Melbourne in January 1913, which we should remember was only a few months before the outbreak of the First Great World War. And almost as soon as it started, it demonstrated how effective it was going to be. Because in the same city, the huge Melbourne Board of Works that covered most of the capital works of the city went, as it usually did, to the London money market to raise £1 million, of course it was then, to continue and to finance their debt. And the best they could get was 4.5% interest, which at that stage was regarded as very high. I mean, we regard it as low today, but at that time it was regarded as very high. And that offer was immediately countered by this fledgling Commonwealth Bank that said, look, we'll give you the money for 0.5%, which the Melbourne Board of Works accepted, and so they saved themselves 4% almost straight away, which otherwise the people of Australia would have had to pay.
1 year later, the First World War broke out. Australia, like other nations, needed loans to finance the war effort. The best on offer in London was 6%. Back in Australia, the Commonwealth Bank offered a loan of £350 million at 0.5% interest, thus saving the country millions of dollars in interest. And so the People's Bank continued to finance farmers, businessmen and governments alike at these very competitive rates. Naturally, the private banks looked on with ill-concealed rage and fear, which translated into action in 1924, the most disastrous year in the annals of Australian economic history. In June 1924, the Bruce Page government brought in a bill to amend the Commonwealth Banks Act by taking control from the governor and placing it in the hands of a board of directors who came from commerce, finance, farming and industry, and which also included the governor and secretary of the Treasury. From that moment on, the bank ceased to compete in any way with the private banks and became simply another trading bank which succumbed to common policy. Likewise, the Labor Party, which had produced such men as Andrew Fisher and King O'Malley, with their determination to rescue the country from private financial monopoly, changed over the next 40 years into a creature of the Socialist Internationale. But this change did not happen all at once. In 1934, a brilliant young Labor candidate stood for election in the federal seat of Fremantle. His name was John Curtin.
At the time that John Curtin stood for office as a young candidate in Fremantle, of course, it was right in the middle of the Depression. People were being pulverized. We had, I think, up to 27% unemployment at one stage. We didn't have the whole social service structure that we've got now, so people were really hurting. Very, very miserable and tragic period in Australian history. And this young guy stands, and in his election pamphlet, which I've got, for 1934, he's dealing with this. And the actual wording that he used in his pamphlet read like this: the year 1930-31 was the most disastrous year financially in the history of the world. In Australia and elsewhere, the financial position of the government and private enterprise was so acute that a general collapse was only narrowly averted. In that year, private banks called up overdrafts, raised the rate of interest, and enjoyed substantial profits by taking heavy toll of government and industry. So here's the same theme. The banks have really hurt the government and the people and our industries. So, he said, if you elect me, I'm going to go back to the original Commonwealth Bank. And the wording of his pamphlet said, restrictions imposed upon the Commonwealth Bank in 1924 by the Bruce Page government will be removed and the bank freed to enter into vigorous competition with the private banks to secure for the people the profits and privileges of banking, which are now practically monopolized by private banking institutions. So he'd got the whole story. And on the front of his election pamphlet, of course, he had a picture of the Commonwealth Bank. So the sort of theme that Curtin was pushing as an answer to the nation's crisis was diametrically opposed to what exactly the same party is pushing 40 years later on. And Curtin ultimately, of course, became a wartime prime minister. And although he was never successful in completely getting back the Commonwealth Bank, he used credit quite intelligently during the war, and it was a very big issue, which was then taken up after his death, and the war had drained Curtin. He died almost at the time of its end by the engine driver and the real working leader, Ben Chifley, who succeeded him, who went 2 steps too far. Instead of trying to regenerate the Commonwealth Bank to compete with the private trading banks, he went to the point of suggesting we ought to absolutely eliminate all private banking and have one government-controlled banking monopoly, which would have been just as dangerous as having a private monopoly, and in fact was advocated by Marx in the Communist Manifesto. And that issue finally ended up in the Australian High Court, and the High Court ruled it was unconstitutional. So the battle to establish a people's bank to safeguard Australia against the private monopoly began to wither on the vine.
It was not until 23 years later that Labor regained power under Gough Whitlam, and what a different party that was. Gone was the working man's party of shearers, miners, railwaymen and boilermakers. The few who remained had little impact. One of the last was Rex Patterson, Shadow Minister for Agriculture until the Whitlam Party gained office.
I think you've got to remember that before the 1972 federal election, we'd gone through a period where in that 10 years, from round about 60 to 70, we'd lost 30,000 farmers. Mainly due to the collapse of wool and a massive drought that gripped the eastern states. But nevertheless, it really threw a panic into the government and into the whole rural scene. We were down to 250,000 farmers, 250,000 approximately. And it was in that situation that the Labour Party put forward its rural policy under its shadow minister, Dr. Rex Patterson, who was a brilliant man, a former Fulbright scholar, and one of the old Labour school. And in their policy in 1971, the Labour Party is quite specific. The only chance we've got of saving the farmers is to deal with the issue of money and credit. And so they actually had in their pamphlet these words: Labour's debt alleviation policies would take the form of making available to potentially viable properties long-term, low-interest loans to pay off immediately the crippling high-interest short-term loans which many producers have been forced to accept. At the same time, a Labour government will allow a holiday period of up to 5 years for potentially viable farmers as regard the repayment of principal and interest in order to allow farmers to strengthen their financial position. We're going to give farmers a 5-year holiday from paying debt or interest in order to let them get back onto a viable footing. They acknowledged that was the only way it could be done. How would it be financed? The policy went on to explain. Labour's long-term development policies and reconstruction policies will be financed through the Commonwealth Bank under the best possible terms and conditions which the nation can afford. Labour is not tied, nor has it any allegiance to the private banking sector and hire purchase institutions whose operations are based on the normal business objective of maximising profits and returns to shareholders. Labour believes that a lowering of the rate of interest for funds used for the efficient production of commodities, particularly for the earning of export income, will assist increased productivity. This in turn is necessary to counter the forces of inflation associated with full employment and growth. Quite specific, quite clear. Labour was elected The man who had designed that policy for the party never even got into the rural ministry, the agricultural ministry. He was shunted into a minor portfolio. That policy was abandoned, and from that time to the early 90s, we've lost a further 127,000 farmers, and 70% of the remainder are now technically bankrupt. A total disaster, because we didn't dare grasp the money question.
Here is a picture of the growth in the amount of money in Australia over the last 20 years. It has grown from approximately 20 billion in 1972 to over 200 billion in 1992. Almost all of that money was created under the normal credit creation function of the banking system. It has come into existence as, and only as, an interest-bearing debt. During the same 20-year period, interest rates have gone as high, in some cases, as 30%. Now, I wonder what the situation would have been today if the Commonwealth Bank had succeeded in operating as envisaged by Fisher, O'Malley, Denison Miller and John Curtin. Would we have over 1 million unemployed? Would we have lost 127,000 farmers and 50% of our manufacturing industries? Would our nation have become hooked on importing the things our forefathers used to produce here in this country, getting our nation into bigger and bigger overseas debt in the process? Would we now be considering the globalisation of Australia, discarding our independence in favour of international ownership and control? Would we have become, in the words of Senator Gareth Evans, a prisoner of the world economy? Remember that this problem is not particular to either the United States or Australia. It confronts every government in what remains of the free world. The eminent British historian Sir Arthur Bryant summed it up rather well back in 1982.
All the spending money which has been flooding the national economy for so long has been and is being created by borrowing at interest, and high rates of interest at that. And the biggest borrower of all is the government itself. And the interest which is having to be paid by the government for every pound it borrows has had to be extracted from the community in the form of taxation. And the higher the taxation, the more the wealth-producing taxpayer has had to borrow in order to keep on producing, to pay his employees, to operate and maintain his premises and machinery, to transport and market his products, and the more he has to charge his customers, both domestic and foreign, so increasing inflation at home and pricing himself out of the market abroad. It would be no more, but far less inflationary, to issue government-backed paper money with no interest-bearing debt attached to it than to print similar paper money charged with the payment of a heavy annual interest rate by the taxpayer, the method at present employed by the financial servants of the government and the nation.